Hello there and welcome to myfinanceteacher.org. In this video I want to have a quick look at the general stock market. We haven't looked at it for quite a while, and the last time we looked at the general stock market, if memory serves well, is in this video on the 20th of October. As you see, we were expecting a bit of a decline into the intermediate cycle low before a rally into a new cycle. And looking at 20th of October over here, that's more or less exactly what happened. We were expecting a rally into a new intermediate cycle, and to be honest, I wasn't even expecting this rally to be this strong into the first daily cycle, which so far has already been going on for 54 days, and RSI cycled all the way from oversold from 29 all the way to overbought at the recent high of 82.2. But to be completely honest, over here on the 11th of December, I also mentioned to the members at myfinanceteacher.org that the stock market was at resistance. That's over here on the 11th of December, the stock market was at resistance, but looks like I was around a week too early as the stock market sliced through that resistance, and it's only now that we're starting to see some signs of a short-term decline into the end of the first daily cycle. So talking about these cycles, they usually last for around a couple of months. The ongoing one has been somewhat stretched at 54 days and we are far from the daily cycle low yet. So if we see some continuation tomorrow, some confirmation of a decline into that daily cycle, I would expect this daily cycle to continue stepping down. There is some support around 45.40 on S&P 500, and there is also a pretty good chance that the S&P 500 would continue down, test the 50-day moving average, perhaps even dip a little below that to close this gap and test that next support around 4400. First of all though, let's see what happens tomorrow. We want to see that confirmation of the beginning of this decline down into the short-term daily cycle low. But at first glance, it does seem that the market is overheated and has been overheated for quite a while. This is a market sentiment optimism index for S&P 500, and usually whenever everyone is excited about their market performance, when everybody is elated, that's when you perhaps want to take some profits. As you see these red circles indicating the tops in market sentiment, the tops in elation, come relatively close to those local highs on the market. With some exceptions, of course. There is a big exception over here with the green circle. That's just after the pandemic, with trillions of dollars being printed, the market managed to continue pushing higher for quite a while. As I mentioned, as a general rule though, you do want to be somewhat cautious when everyone is greedy. And breaking down this general market sentiment into smart money and dumb money, we see a somewhat similar picture suggesting that perhaps some caution is advised and it looks like the market is ready to drop down into the short-term daily cycle low. The blue line on the bottom here is the smart money confidence. We see that it's pretty low over the last couple of months. It's declined from around 0.6 around that end of October down to under 0.4 right now, and it's even been under 0.3 recently. That's earlier in December when I was talking about that resistance level. And on the other hand, this red line is a dumb money confidence, which is pretty high right now, well above 0.8. And while yes, there are some times when dumb money turns out to be correct, generally we do want to follow the smart money instead. Hence, quite a bit of caution is advised right now with the general stock market. And as the ongoing daily cycle has already been going on for quite a while, perhaps this decline will be relatively swift. That's because usually these daily cycles last for around a couple of months, of course sometimes shorter as the previous cycle over here, sometimes longer, and if this decline takes into say somewhere around mid-January, that already would imply nearly 80 days for this short-term daily cycle. That's all for this brief video. For much more regular and detailed updates, join us at myfinanceteacher.org, where we discuss a range of assets. One of the most interesting categories is perhaps juniors in metals. As gold price is approaching its all-time high again, if we do finally see a convincing breakout and a move towards say 2300, those juniors might provide your portfolio that additional torque, outperforming the precious metals themselves. So for detailed data-rich analysis, just click this join now button, and as I mentioned, the fee for new membership will increase in January. Keep your cool in volatile markets. Have a terrific Thursday. Bye bye.